Hello, taxpayers and electric vehicle owners or prospective electrical vehicle owners. A year ago, I released a video just trying to go over a tax credit available to individuals that purchase an electric vehicle. Uh, IRC 30D, new qualified plug in electrical drive motor vehicle credit. Now, if you type in IRC 30D, on Google, you will find the IRS list of vehicles that have a credit available to them if they are either fully electrical or a electrical plug-in hybrid. Uh, Go straight to the source on this one. They're going to tell you exactly what the credit amount is per vehicle, and that will allow you to. That should be able to help you make the decision on which car you might be pursuing. This is also available to some motorcycles. You'd be surprised on what's on that list. I mean, let me click over here. No, there was some available to Bentley and Porsche. Yeah, the Bentayga hybrid SUV, there's still a $7,500 credit available, which is pretty significant. Now, one of the reasons I released that video last year is because there was a lot of talk about uh, the vehicles that phased out. Basically, there was a 200,000 vehicle limit per manufacturer. Tesla has surpassed that years ago. I'm sorry, it starts to phase out after 200 vehicles have been sold by each manufacturer. What got me excited is there was a lot of talk that that credit might be coming back to Tesla. It's not back. I don't think there's any talks right now of it coming back. Like a lot of stuff, it's just talk when it comes to legislation. It needs to be put into law until we can truly rely on it. So there was a lot of hoopla around that. A lot of people getting excited, myself included. I went and test drove some Teslas. Can't wait till I can get one of those bad boys. But at the time, it just simply didn't make sense for us. So just wanted to send a follow-up video. I don't really have much to say besides go straight to the source, IRC 30D, under the IRS website, and there's a full list of manufacturers and the vehicles that might have a credit available to them. The way this credit works, let me just take a step back and explain how tax credits work. There are some that are refundable, and there are some that are non-refundable. The child tax credit, if you have kids, you would have saw money deposited into your account July through December of last year. That's an example of a refundable credit. It was sent right to you. Non-refundable credits lower our tax liability when we file, but the difference is not put in your pocket. That's a non-refundable credit. Now, with this electrical vehicle credit, let's say your tax at the end of the year is $1,500. So after all said and done, your tax is $1,500. But let me just go to my list right here. Let's say you bought a BMW i4. That's a $7,500 credit. So let's say your tax was only $1,500. You bought a BMW i4 in the year with a credit available of $7,500. So that $7,500 credit is first going to axe out the tax liability you have of $1,500, and there's a difference of $6,000. The way this credit works, that $6,000 is not just sent to you as a refund. The idea is that remaining credit is only available to axe out any future tax liability. So that remaining $6,000 does get carried forward to the next year, but you're not going to see that refunded and put into your pocket, if you will. So it can be confusing. Everyone's return is different. Do not quote me on a single thing I say here because your tax return is going to be different. I'm trying to speak in hypotheticals for educational purposes. So yeah, everyone's situation is different. Check the credit amount available to each car. And then you got to look at your tax return or get with your accountant to further look into it to see what might be, I guess, left over and carried forward to the next year. Like I said, there's a $7,500 credit to that I4. But if your tax liability is less than that, you're not going to see any difference refunded to you. Now, let's say your tax liability is $8,000. So you file everything. At the end of that return, your tax, not your refund or what you owe, your total tax is $8,000. Well, you have a $7,500 credit available to you. So that $7,500 is going to axe out the first $7,500 of tax liability, and there's going to be a remainder of $500 that you are still subject to pay. So, like I said originally, your tax liability was $8,000. You bought an I-4 that had a $7,500 tax credit available to it. So that I-4 axed out the first $7,500 of tax that you were subject to, and the remaining $500 of tax still needs to be paid. So you had an $8,000 tax liability, but that I-4 gave you a $7,500 non-refundable tax credit. Bringing your tax due today to $500. That's just a small example. Again, everyone's situation is different. You got to look into this and how it pertains to your return. But that's just a general idea of how this credit works. Going back to that Tesla credit, I'm bothered that it didn't come back. Of course, there's some bureaucracy in that, I'm sure, but flat out, the credit is not available to new Tesla purchases. So you might have available credits in California. I think they have $1,000 instant rebate. Some states might have similar ones, but the large federal EV tax credit is not going to be available to any new Tesla purchases unless something big changes. Again, it's not even on anyone's radar right now, so don't bank on it. If you want a Tesla, go ahead and buy it, but be sure you're not depending on that tax credit because there's nothing in sight right now. Again, go to IRS IRC 30D to look up the list of vehicles and see what credit might be available. I'm not even going to get into the weeds of used EVs, but oftentimes the first purchaser is who's going to see the bulk of that electric vehicle tax credit. I'll release more, but I just wanted to clarify as it's been a year. That was my most viewed video. It's what made me famous, so wanted to just follow up. All right, guys, thanks for watching. Any feedback's appreciated. Happy tax paying. Happy driving. Take care. Goodbye.